Hey, everybody, welcome back to another podcast, Printing's Alive, with me, your host, Warren Werbitt, guy who loves print almost more than anyone. Today we have I'm going to say super distinguished guest today. We've got, sorry for laughing, but you made me laugh. We got Jim Russell of New Direction Partners. How you doing?
I'm doing great, Warren. How are you doing?
Great, thanks.
I
And the
love the shirt
reason,
you're wearing. Tell me about
oh
your
my God.
shirt.
The shirt, gotta love the shirt. So print like magic, but it's real. So real quickly, only because you asked, because I'm here to talk to you, not you to me. I've got this T-shirt line out. Got the printwhisper.shop. Check it out. It's everything I love in life. It's print, fishing, mental health, AI, things I've got issues with, don't have issues with. But quality T-shirts makes the arms look good. Guys look good, unisex, all that stuff. So go check it out. But I appreciate you asking.
All right, I'll
So
check it out.
now let's get back to the real deal. The reason he is super distinguished is because this guy is one of the guys that makes things happen for printers when they get to the end of their career and they want to sell. Would that be a good intro?
Sure, that was great. I really appreciate that.
Because Jim's a flashy guy and he likes all that jazz. So it works perfect.
So,
Right? I'll just keep making you slightly uncomfortable.
all right, Warren. Well, I appreciate that.
No, I won't do that. But tell us a little bit about you, what you do, what did you do, and what
Sure.
you're helping with.
So, well, Warren, as you know, you and I met when I owned my own printing company based out of the Detroit market, and it's currently still in business called Arbor Oakland Group, although I sold it in 2005. And Warren and I got to know each other when we were in a peer group together. Did some fishing and golfing together, and learned a lot from each other in our peer group. So we have slightly different personalities. Warren's a little more enthusiastic than I am sometimes, but still enjoy each other's company and are able to share ideas back and forth, and it's been great. So as we alluded to. I worked with a gentleman named Peter Schaefer to sell my printing company in 2005. And after we did that, there was some changes going on at the previous company. Peter worked at Compass Capital. And Peter and myself, Tom Williams, and Paul Riley started New Direction Partners. And what that is a niche investment banking firm. We do mergers and acquisitions, but all in the printing and packaging industry. So 90% of the work we do is representing sellers when they're ready to retire and sell their business. And we've been doing it now for nearly 20 years. We're probably involved in about 15, maybe 20 transactions a year. And so that in a nutshell is what we do at New Direction Partners.
Cool. So sounds like a pretty important company within our industry,
Well,
right?
I'll let you decide how important it is, but it is rewarding when we match up the right buyer, the right seller. We allow someone, or we help enable someone who's built a good company, worked out a long time, and they're ready to take the next step in their life, whether it's retirement or a second career. And if we can find the right buyer that helps them enable them to do that, there's some satisfaction that comes from that.
Cool. So I wanted to have you on today because I wanted to talk about selling the company. I mean, there's people out there who want to buy, but I think just when I look around the industry, when I look at the people, some of our peers, you couldn't take it a long time ago, so you got out right away. Worked out well for you. Some of us couldn't get out and then got stuck, and too bad they didn't get out. And then there's those who still have a chance to get out. And I just wanted to talk about what's involved in getting out, because as a print owner or as an owner of a company, my thinking is, and I'm going to speak on behalf of the average inexperienced seller, because there are guys that are savvy in selling their companies and they know what they're doing. But the average printer has put in, let's say, 25 years, 60 hours a week, which comes out to 150,000 hours that they've invested in their company, just their time, never mind money and aggravation and stress. And they're doing $10 million a year. and they think their company's worth 15 million, right? Would that be about right?
Sure, it's probably not, but some of
No,
them think.
no, the thinking. I didn't say the
Yeah, yep,
actual transaction.
yeah,
So
sure.
now, for the print people listening to me, you're probably cheering me on and saying, way to go. Yes, you got it right, but we're probably worth more than that. Uh, I can tell you, unfortunately, you're dreaming.
Yeah.
Uh,
Thank
right?
you for setting a realistic goal for them. I appreciate that.
Well, you know what? I'm saying that because it's not that I want to make your life easier when they come to you to sell, but I want them to be real in their expectations when they're thinking about selling, so they're not setting themselves up to be a little bit depressed later and go into some form of anxiety or any of that, not on the good side. But there's a lot of things that people have to think about when they're selling, right? So, and not in any particular order, but what would be the biggest thing that causes a person? No, I'm not going to come out. Not going to come out right. But what would be one of the things where a seller thinks he has so much value, but he doesn't?
Sure. So for a company that's profitable, a lot of times sellers get hung up on their equipment. We've got a new press. We've got this new inkjet. We've got new flatbeds and new scanners. Our equipment's great. We're in a beautiful building. You know, all these things that from the outside, driving by on the road, you say, wow, that's a successful company. And then you say, well, great. Can I look at your financial statements? And sometimes they match up to that image and sometimes they don't. And what a seller needs to realize is what a buyer is generally buying is the cash flow, the profitability of the company. And so that outward appearance of the bright, shiny equipment does not necessarily translate to a bright, shiny paycheck when you go to sell your company.
Yeah, and oh my God, there's so many places to go with this. Um, so okay, I think one of the reasons people want to sell is they get to a certain point and they have to make an additional investment in their business, like a new press for $3.5 million today, or a
Yeah,
digital press for $1 million,
yeah,
right? My thinking is before you do that, that's when you start to look at if you're considering of getting out in 2, 3, 4, 5 years, you should be looking at getting out and what you need to do before you buy the press. Would you agree?
yeah, absolutely, Warren. And you may have heard us say this before, when we're talking in a webinar or seminar or something, but it used to be, or it still is, when you sell your company, just like selling a house, you have to pay off the debt on your business, just like you have to pay off the mortgage on your house. And so if you're going to sell in 3 years or 2 years, and you go out and take out a 7 year note on $1.5 million press, you're not going to have much of that paid off when you try to sell in 2 years. And so that payoff on that equipment is going to cut into your proceeds that you put in your pocket. And so, from an equipment standpoint, the best time to sell is when you've almost got that equipment paid off or it's paid down significantly, but it still has some runway ahead of it. When you can say to a buyer, hey, this equipment, you're not going to have to make any capital expenditures in the next 3 or 4 or 5 years because this equipment has a lot of life in it. That from a purely equipment standpoint, that's the best time to sell.
Cool. Now just jumping around because of course I'm all over the place as usual. Um, I want to sell I wake up this morning and I want to sell my company,
Yeah,
and I call you.
yeah. First thing we want to do, Warren, I mean, we'll talk you through the process and explain to you how it works and explain to you who likely buyers are in the different segments of the industry. Um, but the first thing we would probably want to do for you is we would send you a short list of about 5 questions and 3 or 4 information requests that would include some financials. and we'll prepare at no charge to you a desktop valuation. And we'll come back to you. It just takes us a few days to do that. And we'll set up a call with you a week later and say, hey, Warren, based on these financials, we'll email you the report. We'll walk you through it. Here's how your company would be valued. And we'll value it a couple of different ways. If you're a profitable company making money, we're going to value it based on a multiple of EBITDA, which you know that term, but basically based on the cash flow or the profitability of the company. And even if you're not making money, um, we can value the company based on the assets and selling to another printer who's going to do a tuck in. And usually the company will sell at the higher of those two values. But but the benefit of doing that for both us and for you is it sets that expectation. It gives you a realistic idea of what your company is going to be worth. Sometimes companies sell for more than that value. We just sold one recently for significantly more than the estimate we gave a buyer. But that way it avoids what you started out this interview talking about, somebody that's got a $10 million company. They think it's worth 15 and it's really worth 4.
How many owners come to you for the initial discussion? What percentage of the owners that come to you for the initial discussion walk away with their head down?
Um, you know, I don't think a lot of them walk away with their head down. Maybe they do, and I just don't see it. Some of them certainly acknowledge, hey, I appreciate that. I realize that's probably reality. I'm going to try to hang on a couple of years and grow the business. I did one of these valuations now 6 or 8 months ago, and it was a scenario I just described about the debt. They had bought their equipment 2 years earlier. They still had a lot of debt. And he said, hey, I'm just going to work to pay down this debt for the next couple of years, and then I'll sell it. And that's exactly, he's making great headway on paying down his debt, and his company's still growing. So he's not in a distressed state where he's worried, will I still be here in 2 years? He'll be able to do that. He'll pay down his debt, and he'll put more in his pocket when he goes to sell.
Oh, I'm sure. So when I ask about the walking with their head down, I really just mean how many print owners are awakened to what's really involved and how it goes when you're selling a company.
Oh, I think some of them are surprised, but I guess by and large, we talk at webinars and events enough these days. I think most buyers, while they don't have a immense knowledge of what's going to happen. They have a general high level idea of what the process is going to look like. But yeah, but there are some, to your point earlier, there are some that small company, small town, been in the family 40 years, never thought about selling it. And so they've really never studied what that process looks like. So, and we sold one of those just in the last couple months. Was a third generation. They'd never really thought about selling, but the third generation decided, they were younger and they said, this isn't really what I want to do the rest of my life. And um, so we worked with them and the second generation owner to sell it. And, the whole process was new to them, but got through it just fine and a successful outcome.
Cool. What's the current market look like in terms of M&A and, consolidation, buying, whatever, selling?
Yeah. Great question. And, we would say today it's pretty strong. 2024 was a slower year than uh, past years. We think partially because, number one, the uncertainty of the election, and number two, 2024 was kind of a down year for print overall. And so people said, oh, maybe I don't want to sell now. Business is declining, but it's really picked up. This has been a strong year for M&A in all sectors, from packaging to commercial print, labels, large format. There's active buyers in all of those segments. And whether it's a large company that might be attractive to private equity or a small company that's more attractive as a tuck in to a regional competitor. There are buyers out there for all of those businesses today.
When an owner sells a company, from what you see or experience, do they stay on? If they stay on, for how long? And what else do you see that goes on? And I'm asking that because a lot of people think when they sell their company, they're just going to make a deal with the company and stay on.
Yeah,
And I know from others, friends who sold businesses, it doesn't always work out that way.
yeah. Yeah, it doesn't always work out the way you want it to, but generally, if you're upfront and have some flexibility, we can find a buyer that will accommodate that. Like we're selling right now a relatively small, I think it's a $2.5 million label company. And the owner, who's very active in the business, he wants out. He doesn't want to stay any longer than 6 months. And so we've just been upfront with that, with about that with buyers. The buyers understand that, and we've got, I think, 3 offers on that business, and all 3 of them understand that that seller is not going to stay long term. But it really depends. Generally speaking, it depends on what that seller wants to do. Buyers will usually accommodate you either way. But the more involved you are in sales, if you are still really, really involved in sales, if you're the key driver maintaining that relationship with the customer, if your leaving tomorrow would jeopardize the revenue stream, then that buyer is going to want you to stick around, whether it's 6 months or 2 years, whatever it's going to take to ensure a smooth transition of that sales is what the buyer is going to be interested in.
What percentage of the sellers that agree to stay on, say for 2 years, actually make 2 years? Because it changes, right? When you're not the owner anymore.
Oh yeah, it does. It absolutely does. You know, I would say probably 70, 80% of them make it that 2 years. A few of them stay longer, but some of them get to the 2 year mark and they're ready to go. It is, you're smiling, and I know you know this. It's different working for someone else than when you've run your own company, and you've been the final decision maker for 10, 20, 30 years, and now you've got a boss to report to. um, we've seen it, although, and I've told this story before, so I apologize if you heard it, but I remember we were putting a deal together one time. We were merging 2 companies together, and one was a little larger and one was a little more profitable. And we were going to make that gentleman the president of the company. And the deal was just dragging on and on. And finally, I said, Chuck, why don't you want to get this done? And he said, Jim, I don't want to be the president. I don't want to make the decisions anymore. I just want to sell. And so we flip flopped it and made the other owner the president of the company, got the deal done a few months later. And Chuck was happy. He stuck around 5 years just as a salesman, and he was happy. And so you just have to be upfront and honest with the buyer about what your objectives are. And generally, you can figure it out. But Chuck
Cool.
did not want to run the company anymore.
Oh, I get it.
Yeah, yeah, yeah.
I
And there are a lot of owners like that they've sold and they're happy to not have to make the personnel decisions and worry about payroll on Friday, and you know sign the personal guarantee on the new press like you alluded to earlier. I mean, all of these things, you know, I've said this before because I know it applied to me and perhaps to you. I was willing to roll those dice a lot more and sign a personal guarantee when I was in my 30s and 40s than when I'm in my 50s and 60s.
Oh, you no kidding. I mean,
Yeah,
the last dice I rolled was a $5 million press, right?
yeah.
And it was great. And yeah, earlier on, I could do no wrong. I did a lot of wrong. Don't get me wrong,
But we
but
thought we were invincible.
yeah, and you work through your mistakes and you fix them and you learn again. But like when my business came to an end, unfortunately, honestly, I didn't have it in me to go do it again. I have a lot of energy and I could be a great asset for somebody, but I didn't have the wherewithal to sign blank checks like I used to and build it and they will come. And, the labor market has changed a lot over the years where that could be the single handedly one of the biggest issues you have to deal with.
Yeah,
Getting the machine and the financing is easy. Finding good people is not so easy anymore.
yeah,
It's
yeah.
it's funny how that changed, right? It used to be
Absolutely, you're right. Yeah.
used to be banking and money that was hard. Now they're throwing it at you. Um, uh, I'm going to jump to equity companies. Lots of purchases going on with some of the medium and big size companies by equity groups. What's up with that? My take is nothing good other than the seller can get a lot more money.
Well, yeah, I mean, certainly, I I don't want to badmouth on that in any way. Some of those deals are right for the right circumstances and the
Absolutely.
right seller. You know, if we back up 8, 10 years ago, private equity wouldn't have anything to do with the printing industry. We were kind of blackballed. It was a down and dirty, old industrial industry. And a couple things changed there. I think number one, from a commercial printing standpoint, you've heard us talk before about the haves and the have nots. And there are a lot of very progressive commercial printers that have reinvented themselves. They've become full service marketing companies. Their customers are ordering off of digital storefronts. They're doing distribution, fulfillment, large format, selling ad specialties, and maybe only 50% of their work is offset printing now. And they generate 50% of their revenue from non-print. And those companies are attractive to private equity because their customers are sticky. And then from the packaging perspective, coming out of COVID, the label and the packaging companies just did so well that a lot of private equity firms went bonkers, went just absolutely crazy, buying up label companies and drove those multiples up to numbers we'd never seen before. And that's come back down some, but still, we recently marketed a very profitable label company and we had 23 offers on it. I mean, so there are still a lot of
Wow.
interest in profitable packaging and label companies. You know, we marketed maybe a similarly profitable commercial printing company and we had 3 or 4 offers. I mean, good and at drastically different multiples.
Well, labels are a little sexier these days than
Yeah,
just regular print, right? And
yeah,
packaging, everyone's also a little high on it. Although I've heard from a few people it's a little soft.
yeah.
So we
But
gotta, we gotta be careful.
but you're right about a private equity firm would acknowledge right on day one they're in it for the ROI. I don't want to say short term. If you look at 5 to 7 years as short term, but they're not in it indefinitely. Where a strategic buyer is looking at your company, it's a family business. They're holding it long term. They're looking out 10, 20. They're looking at the long term.
Next
Private
generation.
equity, to how you open up this segment, private equity will usually want the seller to roll some equity or have some skin in the game in the new company. And we've seen, I was just reading an article, we've seen this happen many times. The buyer, the seller gets a check when they sell their private equity, and they get another very nice check 5 to 7 years later when private equity sells the company again.
Or not.
Or not.
Like,
Not everyone is a success, but many times they are.
right, right. The other thing is, if you want to sell to a group like that, your holdout can't be your concern for your employees, correct?
Um, Correct. Well, to some extent,
By the way, I'm speaking general, not the exception where they
yes.
work. The
But
rule of
but
thumb is
yeah, the
they
reason
want their money back.
I get it. But the reason I'm disagreeing a little bit, Warren, is
A little bit,
private equity is going to leave your company predominantly intact. They're not going to come in and run it. They're
right?
not going to move it to another location. There might be some job loss, but Yeah, they're probably not going to treat the employees like family like you did. But I also don't want you to imply that they're going to slash half the staff because that's not the case. Where conversely, if you sell to a strategic buyer as a tuck in, they probably don't need a lot of your production people. They don't need your accounting people. There's overlap in production management. They're going to keep all your sales and customer service people, but there's probably more job loss in a tuck in.
Right. Well, if you're doing a tuck in, you're not getting the most money because you're not in the best position. So
That's correct.
let's
Yeah.
so you don't
You
you
might
can't
be
really.
saving some jobs that otherwise would all be eliminated.
Right.
Yeah.
So, and when I talk about the equity firms, just from what I've seen, um, they're not as emotional about the company as the people and the owners are.
Generally speaking,
They're
you're
detached
absolutely
from
correct.
it, and they're into the green.
Yeah.
So, where you might give someone a little bit of leeway, they don't. That I'm not saying that. Of course, they want to keep the right people because they want to keep the business going to get back what they want,
Yeah.
but their decisions aren't made from a print perspective. They're made from a business money perspective.
ROI perspective. Yep.
Yeah. Okay. You want
Yep.
to call it ROI? Call it ROI.
Okay. They
No,
got
no,
to
but
get
just
return to their investors.
no, absolutely. Just for people to know, because there's a lot of people that aren't familiar with those type of deals or those type of companies and what they're out for. I mean,
Yeah.
we had a customer that was bought by a group. Thought they were using us, but we were printing a lot of stuff for them. They were selling. They bought it. They paid tens of millions of dollars, and then they decided to move it to Mexico to get a quicker ROI, put 400 people out of work, and then ruin the whole company because they lost the feel of what made the company. So
Yeah.
you get a
Yeah.
few of those. So,
That's yeah. That you're absolutely right. Company culture is likely going to change with private equity owner. And we just did a seminar. Happy to talk to any of your viewers about this, but we have slides in a PowerPoint we do where we talk about the difference in the buyers. What's different about a private equity buyer versus a strategic buyer? And there's 8 or 10 different characteristics where it's vastly different between the two buyers.
yeah, no, for sure. So, yeah, there's just so much to know. And I mean, you have to do many, many deals to get a feel and the experience to know what could happen. I would even suggest to some print owners, speak to other printers that have gone through it and speak to a few of them so you get a few different, experiences that have happened because they're all different. They're
Yeah,
all different. At the end of the day, you want to just maximize what you can. But also know if you're not walking into selling and you're not in a good position, don't expect to get a lot of money.
yeah, yeah,
Right? Because
yep,
it is what it is. So I'm thinking about selling my company. Give me an idea. What's involved? What do you kind of have to do? How long does it take to be in that position for the right buyer to come in? What's the right buyer want to see?
yeah. So lots in that question. I could probably talk for 10 minutes on that, but I won't.
Go
So,
ahead. It's your 10
yeah.
minutes.
So the short answer to the question, how long it takes, we'll start with that. We would generally say you should plan on 6 months from start to finish. Um, in that time
So
frame,
that 6 months is from when you start with a potential buyer.
no, I'm sorry. That like if you said to me today, "Hey, I want to sell my company. I'm hiring you to do that." And so,
Okay.
okay, today is day one. So we're going to spend the first month. You're going to send me a lot of information about your company, financial, sales history, bios on key people. I'm going to visit. We're going to learn what we can about the company. And in that first month, we're going to put together a marketing package. And you've probably seen these, but a 1 page, no name description of the company. We're representing a Midwest printer with 15 million of revenue, this profitability. These are the markets they specialize in, blah, blah, blah. If you'd like to learn more, sign this NDA. And we're also going to put together a book about the company, maybe 15 to 30 pages with a lot more detail that nobody's going to see until after they sign the NDA. So that's a month and a half. We also give you a list of potential buyers we'd like to contact. Um, Then, when all that's done, we reach out to those buyers. We see who's interested, who signs the NDA. We answer some preliminary questions. They may set up a Zoom call where we're going to talk directly with you, but they still haven't come to visit the facility. We're going to ask them to put forth, depending on the size of the deal and how big it is and how many parties are interested, we may ask them to put forth an indication of interest, what they think the value of the company is going to be. So now we're done with, let's say, 3 months or 2.5 months. Now we've got a few indications of interest. So the seller will say, okay, we got 3 offers here. I want to meet with all 3 of these people. Or we got 3 offers here. I only want to meet with this one. And so, depending on schedules, or you're in the middle of summer, or in the middle of holiday season, you take a few weeks or a month, the buyer comes for a visit, you have a dinner together, you get to know each other, and then they finalize their offer. And then once you've accepted that offer, now they have 60 to 90 days to do their due diligence, draft up the legal documents to purchase the business, and then ultimately close on the business. So that's where the 6 month time frame comes in. We've done
Cool.
those as short as a month and a half or 2 months when somebody was desperate and needed to get a deal done by the end of the year. And sometimes if we're struggling to find the right buyer, it could take a year or so.
Yeah, or they lower the price and sell as is. Like
Are they? Yeah, yeah.
do a home sell with no inspection.
There you go. Exactly. A cash offer, no inspection. Here you go.
Cool. For the print owner who wants to sell, how long does it take him to get his house in order before you want to bring somebody in? Like, so do they have to have updated accounting software? Do they have, like, tell me all the little nuances that could affect a person looking at their company that might decrease the value of the offer?
Yeah. So I'm going to answer that. I mean, first off, if there's something driving the sale today, you've got a health issue, you got to get out of your building, you got to buy new equipment and you just don't want to do it and you need to move fast, you know, we can talk about that and see if there's any major hindrances that would prevent a sale. But if you've got time, if you've got a year or two, and you want to get your company in order, here's some things, just some general high level things you want to do. Um, Number one, clean up the balance sheet to the extent you can. Pay down your debt. If you've got loans to yourself, clean up that stuff. Loans to employees, clean up that stuff. If there's intercompany or just goofy non-business related things on your balance sheet, clean up the balance sheet. Number two, if you want to leave right away after the sale, you need to keep that in mind. How involved are you in customer relations? Do you have a management team that can run the business in your absence? Is there somebody, if you may not like the term, but if you got hit by a bus today, who can step in and fill your shoes and run the business in your absence?
That's real, by the
That's
way. It's
real,
not.
yeah. And if you have someone, then your company is more positioned to sell today than if you can't point to that person. And so, how strong is your next leader or your management team, depending on how big your company is. So those are things to consider. Um, you know, you mentioned software. I mean, accounting software per se isn't necessarily, a lot of companies still using QuickBooks or something like that. And that's fine. As long as your books are clean, easy to understand. You don't want a buyer to look at your financials and have all kinds of questions or all kinds of things that need explanation. That will be tricky. And then, the other thing that you need to do in a privately held firm, Warren, you're familiar with the term ad backs, but if, a lot of privately held companies, you do things for tax purposes that the next owner may not do. So if there's, you're paying family members that aren't working, just to get money to the next generation, you're paying above market rent because you own the building. your wife and your kids' cars are owned by the company. The fishing boat's owned by the company or the airplane's owned by the
Hey,
company.
don't mess with the fishing boat.
I understand. I might have hit a nerve there. You know, those are, I mean, those are, they're fine when you're selling your company. They may not be fine with the IRS, but as long as you can identify them and point out to a new buyer, hey, here's $100,000 of personal expenses we run through the company, easily to identify. Then you want to start identifying that kind of stuff so that because that'll increase the value. That's another 100,000 added to
Well,
your
it goes
EBITDA.
back. Right.
Yeah, and so if you're selling for 5 times EBITDA, that's $500,000 added to your sale price. So,
Nice,
so
eh?
those are a few things you can do to, um, and then obviously, clean up the place, make sure it shows as well as you can, and don't defer maintenance, keep the equipment running, things like that.
To me, that's almost the most important, that your shop is in order, that everything is clean, because it's like when you walk into someone's house, it's an indication of how they operate or how they live,
Yeah.
right?
Warren, I left off an important one, which I should touch on. The most important thing when selling a company and when you're talking to different buyers is how is the culture going to fit? And I know you've walked through a lot of different printing companies. I've walked through a lot of printing companies, and you can tell pretty quickly, does this company have a good culture or a bad culture? And I always find it interesting, how do the people interact with the owner? Does the owner know them by name? Are they talking with each other? Are they joking with each other? And I remember one, it just sticks out to me as so terrible. We walk through this shop, the press isn't running, the pressman's sitting beside the press reading the sports page. Him and the owner don't even look at each other or say hi, and we keep going. And I'm like, this is not a good culture at all. And so it's, you can tell when the owner and the employees have a good relationship, that company has a good culture. And
Well, so
that's,
it's funny. It's funny you say that, and I've said it before, but I'll say it again. And if anyone heard me, too bad. But there was a gentleman by the name of the late Larry Kendall who owned a company called Cameo Craft. He was his son Mitchell was in it. Mitchell was third generation. When I went over there with Larry, he was early 70s, and he had three facilities and the most insane label producer, right? Like just Tylenol, all that stuff. And I remember going in to see him and giving me a tour of the place. Number one, the place was immaculate. The pipes were painted, the hot water, the cold water, the gas line, everything a different color. But the one thing that stood out was we went up to one press. It was actually, it was like, I think it was like a 15 unit Gallus of some sort, screen, label printing. And we walk up to it and he showed me it and he says, hey, Jacques, how you doing? And he's talking to the pressman, right? How you
yeah,
doing? He goes, how long you been here? He knows the answer. How's Mary? How your boys? How's your son doing with the marriage? And
yeah,
I'm sitting there just going, whoa, because he's got 100 and something employees.
yeah,
And when we walked away, he said to me, it's so important that you know who's working in your place. And when
yeah,
you walk around and when I take people on tours, he says, and you know them, the people you're bringing on the tour, they know, they notice. That's a relationship builder. They want to deal with you because you're dealing with your people like family.
yeah. That
And
is
after,
a That's an
sorry,
excellent point. Probably the best thing to come out of this whole series is
And
right
and
there.
after that though, every tour, every person I brought to my place, I found myself doing the same thing. And I knew everybody by name because we had that type of culture. But I
Yeah,
think the culture is by far one of the most important things, right? Because any
yeah,
buyer wants to know that the team's staying even if the captain goes.
yeah. Absolutely right. Yeah.
So it's that was pretty cool. What where was I? Oh, okay. So now I'm going to ask you some questions that you're probably not going to like, or you might not even want to answer them.
Right.
Um, you know where I'm going, eh? What's the cost of this?
Oh, you mean what do we charge when we just
Well,
do
we're not
this?
charging to sell.
Yeah.
Actually,
Uh,
before, tell me a little bit more. What's involved? The cost you have now. You have a lawyer. You have an accountant.
Yeah.
Like, what should the buyer be thinking of? Because
Yeah.
they're not just walking in and everyone signs and walks away.
Yeah. No, so the cost, yeah, there are some costs. You're absolutely right. So
Just little
first off,
costs.
um, yeah, a firm like us,
Free. Your guys
we
are almost free, I understand.
yeah, we do. We do this pro bono just because we love it. Just like you, Warren, we love the industry and we're here to help. So, but uh, happy to talk with anybody about the specifics of this. But there's generally a retainer fee, a monthly retainer, get us started. And as I always say, nobody likes paying retainers. You guys, nobody wants to pay me a retainer. We try to limit it in some cases to no more than 6 months, but we have to charge some kind of retainer. Otherwise, I could meet with printers. We could start this process. I could be starting two a week, and we work on it for hundreds of hours over 6 months, and then at the end of the day, they say, "Yeah, thanks, but I'm not going to sell." And so we, like others, we like the buyer, we like the seller to have
But sorry to interrupt, but a retainer is really a buyer's commitment to you that they're interested.
a seller's commitment. That's
Seller,
correct.
sorry,
Yeah,
seller.
yeah. And
Yes.
then other
Okay.
than that, there's a percentage of the deal at closing.
How
And that
much?
just, as the deal gets larger, the percentage comes down, but it starts at a high of 5%.
Okay.
And then, and sometimes for smaller deals, it might be 6%. So, um, but other than that, you also need to budget something for you're going to have your attorney involved. And again, it's going to just depend on the relationship, who the buyer and seller are, how big the deal is. But you need to factor in something for the attorney, and it could be as low as $10,000, and we've seen firms spend $75,000 or $100,000 on bigger, more complex deals, things like that. And then you're going to want to consult with your CPA on the taxes. Everybody's taxes are different. Every state's different. Um, we can tell you what you're going to sell it for, but only your CPA knows what your cost bases are. And so you need to work with your own CPA. So you need to budget some money on your CPA. And those are, and then the actual tax that you're going to pay um, uh, would be another thing that's deducted from your net proceeds.
So anybody selling a company that's of a relative size, say five and up, is probably looking at about 100 grand minimum, all combined fees plus. Would that be fair?
Yeah, it's going to again depend on the sale price, but yeah, I would say
Give or take. I just don't
give
want
or
anybody
yeah,
listening to
give or
walk
take.
in.
Yep,
Right. I don't want anyone walking in thinking you're doing this for $25,000. You're not.
correct. Yep, you're
Right.
correct.
I
It's
mean,
going to
I
be
think the
and a guy selling a $10 or $20 million company is going to be much more than that. But yes,
oh, he's going to be in for two,
that's
three,
that's
four
a
hundred.
that's a fair ballpark for a $5 million company. Yep.
Yeah, you know what? In talking to a lot of people over time and seeing, I think a lot of buyers walk in and they walk out more surprised because they didn't know everything involved. First, to find out they're not getting paid for all the hours they worked their whole life.
Yeah.
Finding out today the word goodwill does not really exist anymore. It used to be a term in the old days, I think. Right? Today
Yeah.
it's black and white. And then they're also not thinking about all the fees, which everybody in the pecking order takes something, which is fine,
Yeah.
but just be aware of it so you don't have to hold your chest as you're trying to breathe
Yeah.
because you're not getting what you thought you were getting at the end. And then there's the tax. Tax is always the grossest part because that's just stolen from you, by somebody you don't even meet.
That's exactly right. Yeah.
Right? So it's really hard. Wow. So I think we're kind of good. Is there anything I didn't ask you that somebody might want to know?
No, I think the only thing I'd add, Warren, is, if somebody's really serious about selling their business, certainly we'd love to talk to them and work with them, but they don't necessarily have to hire us, but we would always say hire an advisor, whether it's
No.
us or somebody else. You're only going to do this once in your lifetime. You probably don't have any past experience doing it. And so you want to do it right. And a good advisor will make you more more than make up for whatever fees you're going to pay them. So, and the other thing I would say is even if the company is not making money, you're just breaking even today. There, you still have a client list or your book of business, as we'll sometimes refer to it. That has a lot of value today. It's very difficult for most printing companies today to grow organically. And so they, tuck-ins, as you're familiar with, Warren, are kind of making a comeback as there's more companies, starting to struggle a little bit again. There will be more tuck-ins available. And so there are always buyers out there for your book of business that will help you monetize your client list. So.
Yeah, and for printers listening, if you don't know tuck-in, really important because you just said for companies that are struggling, tuck-ins are not just for struggling companies. You get to the point where you have to invest in new equipment and you just don't want to. The other thing is you might not be making money, but somebody looking at your company might be able to look at your company and see how they could make a lot more money and then would even deal up with you a little if the benefits were there for them. Like it's really important that you find the benefits for your strategic buyer, right? If you're in a niche,
Yeah.
they don't care about many things other than that niche and taking that niche and building it, expanding on it, which they might pay a lot more money for because they otherwise have no ability to get there.
Yeah. Yeah.
So,
Yeah.
anyways, I think it's pretty amazing. And there's just so much to learn, and you could never know it all when you're doing this stuff, right? Because every time you turn a rock or open a file, something pops out.
Yeah. Every
That's a
deal's a
little
little
different.
different, and there's always a hiccup or a speed bump in every deal that I'm like, haven't seen that one before. So
And nothing ever goes as planned. Doesn't mean it's bad at the end, but it does not go as planned,
there's a lot of
right?
details to work out. It doesn't always go as smooth as we'd like, but
Especially when you're talking about everybody's money.
yeah, that's right. So
Cool. Well, I can't think of anything else at the moment to add. Oh, yeah, one other thing. AI, automation, all that stuff. Those are because all the buzzwords these days. Is that important for companies, or if you're doing it, great. If not, not the end of the world.
yeah, I don't think AI has factored into business value in our industry yet. I mean, obviously, it's impacting things all over the place, but I can't say where I've seen a buyer, say that's factored into their decision. But efficiency, absolutely. I mean, uh, buyers will look at your revenue per employee, and the more you can show them that, and they'll also be looking at if they're going to buy as an existing company, do you have capacity to grow or are you maxed out at capacity? So the more efficient you are, the more attractive you'll be to buyers because buyers want to know that this company can grow or there's room to grow if they're buying a up and running existing business.
Cool. And if you're a seller, think about if you were a buyer, how you would think, because it will make it easier for you not to fight with them because you realize what they're asking you is actually fair and reasonable,
Yeah,
right?
absolutely.
Because it's
Absolutely.
always easier to make a deal when everyone's rowing in the same direction. Okay, I'm gonna wrap it up because wow, just a lot of great information. I don't really have any more questions unless you're free to say something if there's anything else you
No, this has
want.
been great, Warren. It's been great reconnecting with you and enjoyed the opportunity and happy to any of your listeners have questions offline. You can share my contact information. We're happy to help them out.
Yeah, for sure, and I'll put it in the write up when we post the podcast. Thank you. This was great. I mean, it's a hot topic right now, and it's always been a hot topic. But I've always learned that more and more printers need to better understand this, so that when they come to it, the flow is easier for what they could take in and deal with it, and their blood pressure doesn't go too up and down, right?
Very good. That's
Um,
right.
Everybody listening, I hope that this session was good for you. I hope you walk away. If you're an owner and you want to sell, call me. I'll negotiate the deal with Jim for you.
Oh
Uh,
no.
that's my plug-in. But Jim and I always make a deal, so never worry. I won't ruin it.
Yeah,
No, I'm
that's
just
right.
kidding. But you can reach out to me, any information, any conversation. You want to be on the show, let me know. You got a good topic you want to hear about, let me know, and I'll make it happen. Otherwise, I appreciate everybody who listens. Come back and keep listening. Jim, thanks again. Appreciate it. We'll speak with you soon. And to everybody else, just be well, keep printing. Cheers.
Thanks.